All right, cool, man. We're back, and I plan on posting this maybe sometime today. Today's June 13th, 2023. Um, so what I'm looking at, man, is I'm looking at this right here. I'm not gonna lie, I butchered that one. Let me pause it. So, man, I'm looking at this key area right here, and this is kind of like that follow through of what occurred from yesterday. I like these dynamic full figures. So on the higher time frames, I pretty much only look at every 500th number. So for example, over here is the 32,000. The next one is 32,500. I like to see what's occurred on a weekly, monthly, daily at those particular prices over here. I can see that it was supported back in at the end of March. So basically the beginning of the month for April was a huge bullish run, you know, huge bullish run. And then April rejected the 34,000 well into May. It started going back. In May came to grab liquidity of that April high, which rejected a 3,400, a very key price level. Price went up. I don't know exactly what occurred here, but I can always look back. And the month of May eventually came back to fill in the inefficiencies. But look, over here was a supported area, but it was also an inefficient area. The algorithm came to deliver sell side to the penny. But look, it's exactly at the 33,000. So the next run came down to this imbalance, which was supporting the 32,500 on the week on the daily. Look at this inefficiency right here. It came back exactly to the tick. Interesting. So now it's breaking up high. I'm anticipating a potential run of it came up to this high right here. It's rejecting it, but I anticipate price to come up to this region to the 3,500, 34,500 because of the liquidity here. There's a lot of buy stops here. Also, we can see that the algorithm brought price to the consequent encroachment of this higher time frame wick. Now, again, why that's important is because everything is algorithmic in this market. So you can kind of look for clues as to why price will come. Mhm. Consequent encroach. Oh my God, I butchered that. All right. So this is, you see how this wick came to 50% of this wick, which is exactly at the 35,400. If you look to your far right, there's a reason for that. And this is not on a 1 minute chart. This is on a daily. This is on a 1 day chart. This high was from February 14th. I hope y'all got y'all girls some stuff that day, or y'all dudes, or whatever, however you go about it. So I'm anticipating a long market. I'm anticipating a long market. I originally was going to go short. I thought this would be supported, but yeah, I was wrong. It is what it is. So now I'm anticipating a long market to run the liquidity here. That potentially could be the agenda for the next week. There's a lot of news, man. There's a lot of news. Today's Tuesday. CPI this morning. I don't always trade New York. This was a New York news move. And look at all this tomorrow at 2 p.m. Holy shit. I don't even know if I'll be trading tomorrow. I might just look and see what happens, fuck it. So I'm anticipating a long market. So as a scalper, I can also look a little deeper. I can see that this bullish daily candle broke above and closed above the 34,000. That's giving me clues that it's going to be a bullish market. Even if it retraces, it's going to come to retrace this wick, this daily wick, to make it efficient. It's going to deliver sell side here and and support it. This is a huge indication of a bullish market. So I can really just map this out right here. You can really map this out right here and anticipate price to come back down that way. And it may not. It may not keep breaking up above. If so, I'm going to take my shot. I'm going to take my shot because that's a higher probable move. See, I'm moving with probabilities. I'm not moving based on just one idea. You see what I'm saying? Like, you can have an idea. You know what I'm saying? You can have an idea, but what's actually happening? And there's also a liquidity void. A lot of details in this area, bro. And it was at 8:30 open. This stuff is algorithmic, man. At the 34,100. Come on now. Come on now. All this liquidity. Now, it's not going to happen in my session. It's already 4 p.m. So, nah, ain't no trading, bro. Ain't no more trading. Nah, that's done. There were some decent moves today, though. I ain't going to cap. Let me see. Actually, holy fuck. And let me pull this to the 34,300. Nah. This was just one of those rangy days. Oh, it's one of them rangy days. I don't really know how I would have traded this. I could have traded the consolidation, anticipating price to come back down here, failing to displace above this 34,300. I like to see previous rejections from that area. That kind of lets me know this might be this might be an area that's supported. The 34,300 might be supported. And you can also kind of look on a higher time frame to see what that level is supporting also. And if it's supporting a certain level, you can anticipate a short. Not the best price action, but seeing this rejection, this previous rejection at 9:45 equities open, and this rejection here during 1 p.m. I have to use time and price. Time and price is what's occurring at this particular time and why. Failure to displace, in my mind, I'm seeing this as the algorithm generating liquidity. So if the algorithm is generating liquidity, more than likely what's going to happen is going to eventually come back up this way. So I can take my shot. You know, this is where I would have gone in, balanced price range. And you just got to be quick. You got to be quick. Take it to the next full figure. And then I would have pyramided in this as well. We got this liquidity void right here. Break of structure. Came back in to fill it in. This is showing buy side. And you can also see from here, liquidity, break structure, imbalance right here. Enter. Take your shot. Take your shot. Kind of probably have it here. Again to the next full figure. Again, break a structure or liquidity grab. Liquidity grab. Break a structure, imbalance. Right here. You could have entered right there again. That's kind of how I like to pyramid, just kind of follow it from that perspective. It's real small, but I mean, you're gonna be wrong. You're not gonna. I was wrong all day yesterday. Shit, I lost both pyramid entries, yo. But shit, this is how you make that money. You take your shot. So right here was my first entry. Boom. Let's say I did all three entries here. You know what I'm saying? Like this is a decent day. In fact, this could be my whole week. This could be my whole week right here, just by kind of taking your shot. You know what I'm saying? Like this is how you maximize profit. After you get these three wins, get the hell out the market. Get the fuck out the market. Just look at it, take it for what it is, be indifferent. It's a win, it's a win. It's a loss, it's a loss. Whatever. Oh, this is better price action. Yeah. Boom. Liquidity grab, break a structure, came back into an imbalance. Boom, right here, entry. Hey man, and this is just a sell side move. Sell side move. Sell side move. Let's say I got in right here. Boom. 1 p.m. I would have lost it. Okay. See, I got boom. Came back, retest. Boom. Get in. Boom. I would have two trades. So realistically, I kind of like to hit the 1 minute too. So it's gonna be a combination. I probably would have been in this trade. I ain't gonna lie. I would have taken it long. I would have lost that hoe. I would have lost it. Let's keep it a bean. I'd have two more shots. My next shots, a lot of times it does come back to here. This is gonna be like my secondary entry when it comes back to fill it in. It tells me it's supporting this area. More than likely, algorithmically, it wants to generate liquidity. There's just an algorithm that's winning. I'll enter, have my risk above here. Okay, wait for the liquidity grab. Do. Here goes the liquidity grab, break a structure, come back to the imbalance. Entry right here. And I like to just look at it on the line chart. It helps me out. Here's this high, broke that high, broke structure to the downside, came back into an imbalance. I have my stop above here or above the full figure. And that's two entries. That's two entries, man. Realistically, this would have been my day. This would have been my day had I actually been in the market. This is how I trade. I was just really busy today, man. You know, I just couldn't even get to the computer. But 1 p.m., this definitely would have been a trade I'd take long. I'd take it long, lose it. Bummer. Rejection, back into a balanced price range. Come on, BPR at a 34,300 with a previous rejection. All right, so I just wanted to mark it up. So previous rejection, come on, at the 34,300. Then we have a BPR at the 34,300. So in real time, you can kind of see that although my idea was to go long, if I'm wrong, I just have to readjust. But you have to be quick. Got to be quick. So that's one of the harder parts of trading for me. Honestly, it still is. But the more you do it, the more it's just like, all right, you just got to do it. You know what I'm saying? You kind of understand it is what it is. Just go for it. Like, go for it. Push the trade. Push the trade. But make sure you're using proper risk. This is my proper risk. 3 trades a day. That's it. 3 trades a day. I'm gonna push my trade though, man. You know, each entry I'm gonna get in, I'm gonna go in heavy. The better I get, of course, I'm gonna add risk, but this is how I trade. 3 trades a day, win or lose. You know what I'm saying? Some days I only trade twice, but oh shit, some days only once. But this is just a good example of how to push your trade, man. Don't be afraid to do it. Make that part of your system. That's how you beat the curve, man.